we're going to be talking about NT tax codes, how applying for them is an absolute nightmare, or it can be with HMRC, and what you can do to try and speed up this process. So I've been transferring UK pensions for over 10 years now with a number of clients living outside of the UK. One of the biggest advantages of living outside of the UK is that you can apply to have an NT tax code applied to your SIP, normally your international SIP, in order to receive gross pay from your SIP, and you then declare that on your own tax return in your country of origin, as opposed to you being deducted tax at source in the United Kingdom, where you no longer live, you no longer reside, you don't use the services there, and then having to declare it again in your other country, whether that be Spain, Portugal, France, whatever it is. An NT tax code can save you from that drama of having to recoup any overpaid tax from HMRC, which if any of you have had the pleasure of doing, is an absolute nightmare. It's not a very fun organisation to call at 9 o'clock every morning to try and beat the rush of everyone else trying to call them. So, what can you do with your NT tax code? When you come through to do an inquiry with us, if you're looking to make withdrawals and you live outside of the United Kingdom, let us know as soon as possible that you would like to understand how to apply for your NT tax code. This is not something we can do at Cameron James ourselves. We cannot contact HMRC on your behalf. However, we can point you in the right direction of how to do this. We currently have a client in Singapore, Spain, Portugal and France all applying for NT tax codes at the moment. All slightly different timelines depending upon their own individual situation. But let us know early, or let you know how to get the process started, and then it's really interesting for you to start doing that whilst the pension transfer is in process. If the pension transfer takes 2, 3, 4, 5 months to get done, you can be having your NT tax code ready on file, or at least have the process ready once you've made a first withdrawal from your SIP. Typically speaking, you need to make a very small withdrawal from your SIP, maybe an amount of £100 or £1,000, anything that would be below your annual allowance in the UK. This will trigger your normal tax code of 125L or whatever it's called for £12,500 tax-free. That will then allow HMRC to trigger an NT code to pass that on to your SIP provider. So the next time you do a withdrawal from your SIP, you will be paid gross rather than any tax deducted at source from your SIP provider. All SIP providers must deduct tax at source automatically. Otherwise, you can imagine a scenario, someone has a £1 million pension, they take £500,000 as income, and HMRC is saying, oh, hang on, you owe us 40% tax. The person could go off into the sunset and they would never see them again. So that's why the system is there. A lot of our clients do get frustrated with this process. My client currently at the moment in Singapore, very astute person, MD at a bank in Singapore, has actually outsourced this to her accountant because it's a very long and arduous process. There's a lot of paperwork that needs to be done and it's just slow. I have another client in Spain who's retired. She's doing it all herself, but even she had a 4 to 5 month timeline with HMRC. So guys, if you're looking to take withdrawals and you want to have them gross and not deducted tax in the United Kingdom, get your skates on with your NT tax code, let us know below and we can point you in the right direction. Short video today on that, guys. Look forward to speaking with you soon. And as always, take care with your UK pension assets. Thank you.